Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, March 25th, 2024. Today's episode starts with our headline, U.S. consumer confidence tumbled again in March. But don't take it from me, take it from the conference board themselves. U.S. consumer confidence tumbled again in March. The biggest takeaway from this report right here, consumers' expectations were especially gloomy, with pessimism about future business conditions deepening and confidence about future employment prospects falling to a 12-year low. You can see that down here when you scroll down to this chart, present situation and expectations index. The expectations index being blue, apparently going below the 2022 dip, and at a level that has not been seen since 2013. While the present situation index has not fallen into recession territory below 80, the expectations index is, showing some weakness here. As I've been saying on many shows, we are very obviously on the edge of a storm, and we're not in the storm yet. Next up, not a really big thing, M2 money supply expansion. We had an update in the Fed of the M2 money supply, and yes, we did expand for the month of February. Usually during recessions, you tend to see this slow down to the upside. You almost never see it contract, which is why it was so weird to see a contraction from April 2022 down to November of 2023. I'm going to add here that we are still actually below the highs of April 2022 in M2 money supply. Next item on the agenda, I bought a stock IMKTA today for about a 2.5% portfolio position. I've finally found some time to peruse through some stocks, and this one checks all my boxes, so I bought some today. And here's what those boxes look like. The company's name is, I think it's, that's the word for English in Spanish, by the way, Ingles Markets Incorporated. Maybe it's Ingles. I don't know. I don't care. I love what I see here. It's a grocery store chain based in North Carolina, I believe, and it has about 198 stores. It's consumer defensive. And so while I believe, sector-wise, we're right on the edge of a recession, consumer defensive is what outperforms everything here. And this has even proven in price to actually go up during bad times sometimes. So that's why I have here counter-cyclical. I'm going to move that up. There we go, counter-cyclical. Sorry, I'm going to change the order a little bit here, because the next thing I want to mention is that part of the reason that the price is down because of, I think it was Hurricane Helene, there was some damage, and so we had sort of a temporary earnings glut is what I see. The overall cost seemed to be only about $30 million. This is a $1 billion company. So those kinds of things can often present really great opportunities, and I'm going to add that the earnings have already shown some recovering. Apparently, it seems to me we're already getting past this. And just to continue through my list here, I don't want to spend all day explaining this. The 10-year average EPS puts the PE ratio at 11. For an investable company, you want that to be, that's like, growing at a healthy rate with earnings and dividends and everything. 25 is acceptable. And it being only at 11, and considering that it's gone through some pain and it's consumer defensive, so it's not really going to get hurt that much by a downturn in the economy. Everything's aligning so far, and that's not the end of it. It has, to me, wide moat characteristics. It has a brand. You can look the store up. It seems like a friendly brand. It seems like, like a Publix in Florida that we have down here, or Kroger in Michigan. People tend to like their local grocery chains, and so it's got that sort of wide moat characteristic to me. seems to have been expanding, and it's had a lot of revenue growth. I don't need it to expand at this valuation. I'm perfectly happy, even if they didn't build one more store for the rest of its existence. It's But as it stands, it is expanding. It has a long dividend growth history, so that tells me, all of these things together tell me that there's a lot of evidence of really good management here. I'm going to add that the price book ratio is only 0.75. Anything below 1 is sort of a bargain deal because you're paying only 75% of the cost of the actual stuff. So unless this company is going to go out of business, it seems like a great opportunity. I'll add that the balance sheet is also very strong. The current assets alone almost cover the entire liabilities of this company. And then I just added this. The current price is around $67. I'm looking for, the way I calculated this out is, even an average earnings PE ratio over the past 10 years going up to like 15 or 16. That's still dirt cheap. And that's like a 50% increase in the price. And so I'm looking for a 30 to 50% gain in the price. And I'm looking to sell around the $80 or $90 range, maybe with a trailing stop loss. Sorry, I'm kind of doing this some of this on the fly. The current price is around $61. That the math works out a little better that way. Again, it just seems like a great stock on its own, and it's still cheap to me in this range. It's just not like ridiculously cheap. This is like a perfect Benjamin Graham opportunity. When and if I am able to free up some more cash, I will likely double my position around this price. Maybe if it drops lower, especially, I'll be buying a lot more. My max single stock position is going to be a 5% allocation to my portfolio because, if I'm max stocks, if I'm 100% stocks, I want, 20. Around 20 is a comfortable range because if one of them, goes bankrupt, I'll still be okay. It gives enough diversification without too much diversification, so that you can't keep up with, what's going on with your holdings. Next item on the agenda, I'm still short gold and long GDXD. I haven't changed that position yet. I decided to go back to the old format of the show and do the charts after all the other stuff just because it seems to flow better that way. And plus the chart patterns, I'm not a chartist. I'll get to that a little in the community topics. We're segueing straight into this. So community topics number 1, thank you for sharing your best investment decision. It's really cool hearing what you guys are doing. So thank you for sharing what you've shared. Someone also commented that and I've heard other people say this before, they're surprised that me being a fan of Gareth Soloway. I only am really a fan of him because, he knows really basic charting like really well. He's been doing it for a long time. Trendline analysis, as you love it or hate it, there are certain probabilities that just play out like clockwork. And if that can help your investment decisions, then, so be it. It has helped me a lot. And so that's why I use it. I also use Ira Epstein's Bollinger Band methods to help me figure out where things are going a little bit. I mostly listen to him because he's been doing this for like 60 years and he just knows so much about how the markets work together. That's why I generally listen to him. And then the other one is Figuring Out Money. I like keeping up with what he is doing and working on. He's had a lot of success, another technical trader. But again, I'm not a technical trader. I'm a Benjamin Graham value investor, and I like to use those guys to help me make my decisions, and that's pretty much it. Although, I am short gold, so I can't say I'm not, completely out of the trading business. I like to play around a little bit, especially when there seems to be opportunities that line up with my macro views. Coming up later this week, we have Thursday, Q4 GDP, second revision coming out. Also, I added that we have M2 money supply velocity coming out. If money starts slowing down between people, which is shown in the velocity report, it can be a rocking event, So that's why I like to keep an eye on it. And then Friday, of course, we have the PCE inflation Fed favorite data. As always, thank you so much for watching, subscribing, and all the support. I enjoy very much not feeling alone on this investment journey that I'm embarking on. So thank you. Watching, subscribing, supporting. Love it. No major changes in the daily reminders. Watch Macro Update 21125 to hear me explain them. And besides the addition of that stock that I just mentioned earlier today, no changes in the crystal ball ratings nor the portfolio. Watch Portfolio Update 21125 to hear me explain all that stuff. Moving on to the charts, the SPX S&P 500. You can barely see this candle. I gotta zoom in a little bit. That is a heck of a doji. Quite a fight zone today. So it didn't turn into the turnaround Tuesday that I thought may have happened, but we're not exactly above this previous pivot low that we had here yet. It's certainly acting as a fight zone. I know some traders, including the Figuring Out Money guy. If you watch his channel, he's got this golden box here. He's kind of expecting us to get in this range to fight before we head lower. We'll see what happens. I just want to add to the S&P 500 that while the price advanced, the advanced decline line, more stocks went down than up as far as number of stocks. So this is really, the mega caps, the popular stocks that have this enormous speculative value that's bound to go down once the retailers, the dumb money starts, they're about to fall apart here, guys. It's written all over everything right now. But whatever, I'm just a guy with a crystal ball. What do I know? TLT, my favorite place to be, dropping by a whopping 0.01% today. I still see there being a potential playing out of this head and shoulders. If enough cash gets freed up, and if TLT gets back down to this gap fill area below, I'll be buying more TMF. Speaking of Gareth Soloway, the upside down version of TLT, if this goes down, it means TLT goes up. He brought up on his show, I think it was today, the 10-year Treasury note yield showing a pretty clear head and shoulders top. He sees this as potentially playing out, and there's a lot of good reason for it. I mean, after all, we have this. If you've been watching the show, I had a different lines here, and now I'm seeing a little bit more clear. Between these pink lines here is acting sort of like a bear flag, but he sees a head and shoulders stop here, so he doesn't see rates continuing higher. I don't know if they're going to go higher or not, but I do trust his trend line analysis better than mine, and yeah, so I just wanted to add that into the show. My crystal ball is a little foggy on where long-term Treasury yields will be going over the next week or two. I'm not totally sure. I do know that if the S&P 500 really starts tanking, that's when you typically get your rush to safety. And it's Ira Epstein too. Everybody seems, I'm hearing a lot of people out there talking about being bullish on bonds. Finally we're not alone. Yes, I know. Yeah, I know you don't love bonds. We'll get gold when it gets cheap, Drakmar. So the optimism out there is building for us bondholders. Next, crude oil. I'm hearing out there that it's still possible we may get to this $70 range. We haven't hit it yet. Today's high got to $69.70. Again, my expectation is if we hit this, that we will be going down after that. Copper out of left field today, rising 2.87% today. This is today's green candle. This was highly unexpected for me for a chart pattern, just because we've had these little dojis and then a major topping tail. Copper just driving up today. What's really interesting about this is you had manufacturing PMI is coming out pretty weak. That's kind of why we had that on Monday, the large topping tail. But hey, Dr. Copper wants to go up apparently. We're at $5.25. Crazy. I am speculating gold to cool off still from here, perhaps to the midpoint of this channel. As other chartists say, when we have hit the top of this channel, we pull back to the middle. Hit the top of the channel, pull back, not just to the middle, to the bottom. Hit the top of the channel, we haven't pulled back yet. It would make sense for me for gold to go much, much, much lower, but all I'm looking for is to get to this little blue line here to get out of my short, or below it. If it happens to drop really fast one day and get below it, yeah, I'll obviously get out then too. Bitcoin popped up on my radar today. I added a parallel trend line here that just meets the top of January 20th with all of these other tails here. We haven't hit it yet. I would think that when we do hit it, that there will be a lot of selling pressure there. Last chart of the day, 10-year minus 3-month treasury. I said yesterday how we, went to normalization and now we're inverted. We're at 0 here. It's flat. And plus you take a look at the 2-year and the 3-year, we're still completely inverted on that part of the scale. It's just rates are itching. They're itching to drop. That's what I think. But what do I know? I'm just a guy with a crystal ball, and that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, supporting, and subscribing, and see you next time. Robschild.